Hello guys, welcome back to another Lumley trading video. In this one we are going to be doing some analysis on AMC Entertainment, ticker AMC. So obviously we have continued this downtrend. Obviously we had these big momentum pops before. A big gap here when the release of APE shares happened, or APE preferred shares happened. And ever since, really again just keeping that strong downtrend to the downside. Now we are basically at a 52-week low of around 380, obviously we're at $4 now, but very close to that 52-week low. So what are we looking at going forward? And what's actually happened that's quite interesting is on the standard deviation charts, which is where we do our technical analysis, really the deviations have been downtrending so hard that the supports are just so far off. I mean, the only support we have is 35 cents. And that's the 6-month first deviation. We can see on the 1-year chart, the deviation goes negative. So really the only statistical support we have is at 35 cents. Again, just very far from where we are now, and probably not going to be all that tradable. It's quite unlikely that we fall another 90% from where we currently are to fall down to that kind of low. So what would I be paying attention to then, kind of from where we are now downwards? And it would just be really the key psychological levels. So $3.50, $3, $2.50, $2, $1.50, $1, 75 cents, 50 cents, and obviously this 36. Again, don't think it's going to go all the way down here, but I would be looking, and probably will look to trade these statistical levels. And how would I be looking to trade them? Not on outright shares, because it's not something I want to hold. Again, it's a fundamentally weak company anyway. When there's a lot of hype involved, it's just quite a risky stock to kind of hold a long term. So it will be something I look to trade just through options. When it obviously falls down to these key psychological levels, the calls will obviously be down on the day. If we can get some cheap calls, I'll be looking to buy them. Again, just looking to play the premium, not looking to hold to expiry. And again, that can be the other way to play. If you think this is going to squeeze once again, you could just be looking to get some really far out calls, $10, $15, whatever it is. They're going to be quite cheap calls. You can just hold them to expiry. If they, well, not to expiry, but if they don't make any money, cool, they can expire worthless. Not the end of the world. You probably won't lose too much. But if there is a big momentum pump, those will probably increase by quite a bit. So it's one way I'd be looking, or kind of the two main ways I'm looking at trading this stock if I end up trading it. But going higher, what the resistance is. So $5 to around $5.50. This is statistical mean between the 6-month and the 1 year. Not something I'd be looking to trade, not something I'd be looking to touch. Again, I never touch within the statistical mean, so not something I'll be trading. But if we can break up further to around $10, this is where I'll be paying attention to it, more short bias. And again, if I was holding calls, that's where I'd be locking in profits, or at least a majority of it. We have our next resistance at $11.25, then on to $15, pushing high would be $17, then $20, and final levels pushing us all the way to around $22.50, $24.50, and $28.50. So again, some of these levels are very far off. Again, what I'd really be expecting more is obviously if markets continue weak, which is probably more likely, just be watching for the key psychological levels. It's probably how I'll be looking to trade this, just through an options way. But if we do get a short squeeze or a momentum pump, again, I'll probably just be hitting these short. And again, I'm still not going to trade it with outright shares unless I'm hedging with options, just because, again, yes, these can momentum pump. They're not going to stay up at these highs, but it's how much pain can you sit through before you get stopped out, or, you'll blow your account. So that's why these kind of stocks I much prefer trading through options, because just a lot less risk on the table, and they can actually be more upside trading it that way anyway. Anyway, hope you enjoyed the breakdown on AMC. If you did, why not drop a like and subscribe, and check out this analysis video.